Okay, we're back, and we're on question 3, Tangier, or is it Tangier? Is it a more spicy, tasty fruit, or is it a city in North Africa? June 2012, the start time is 15:28, so we're finishing at 16:13. 45-minute question, and just looking quickly at it, it's a cash flow for 11 and an analysis for 14. Cash flow, let me say, he never asks for direct method. Quite rightly, the huge majority of companies presenting cash flow statements use the indirect method, so it's most improbable. It is within his ability, but it's most improbable that he will ask you ever to use the direct method. So it's 11 marks. 11 marks is just short of 20 minutes. 11 times 2 is 22. Take off 10% is 19.8 minutes. I don't know if you knew that's how you calculate your time allocation when you've forgotten your calculator. For instance, 17 marks times 2 will be 34. Take off 3.4. 17 marks is therefore 30.6 minutes. You should practice this. Just do it so it becomes an automatic thing to calculate how many minutes you have for a 6-mark question, mini question. Anyway, here we go. The cash flow. Start point is PBT, profit before tax. I'm just looking at the paragraph at the top of page 7 of the exam, and depreciation amortization with this and this. There were no sales of assets. Property has been revalued. Oh, that's kind of him to tell you that property has been revalued. Can you prepare a statement of cash flow? So there's no particular difficulties. There may be, but we'll find out when we get a little bit further in. PBT, profit before tax, is 195, and then with the standard add-backs, add back depreciation, amortization, and any impairments. Depreciation of 115. These have been charged in arriving at this profit, but these are non-cash expenses, and we're doing a cash flow, so we need to add those back, and we need to add back the finance costs, because I want to know the actual interest paid rather than the interest which is applicable to the year. So 355 is the start point that I'm looking at. Is it 355? No. 310, 67, 375. 375. Then we need the changes in working capital, in inventory, receivables and payables. Change in inventory. As inventory is increased by 90, so this is an outflow. Looking at cash, if I started with, let's say I started with 10 inventory at the start of the year, and I didn't make any sales at all during the year, but I finished it with 35 closing inventory at the end of the year, it means I must have bought 25. So that must have been me paying cash out to buy an increase in inventory, and so that's the explanation as to why an increase in an asset like inventory is an outflow of cash. It's money being spent to increase that level of inventory, and that applies the same with receivables. That you owed me at the start of the year, you owed me 75. At the end of the year, you owed me 195. So far as I'm concerned, I have paid out 120 to you in order that this debt by you to me has increased from 75 to 195. And if you think of it from the other way around, in your terms, your payables have increased from 75 to 195, and that represents a cash inflow. So receivables have gone up by 120, that's a cash outflow. Payables, we're looking just at trade payables here. Trade payables have gone up by 50, and that's the cash inflow. Now, do you know, I'm committed to cardinal sin here. What I tell my students is that if you go down to the bottom of the cash flow, the last 3 lines are net cash flow for the year. Cash flow for the year. And we don't know what it's going to be, but it's going to be a subtotal. And then cash and equivalents brought forward. Now we can pick that up straight from the question paper, and that will give us cash and equivalents carried forward. Cash and equivalents brought forward. The bank account was 120, and there were no others, so brought forward is 120. Carry forward, the bank account is nil, but there is an overdraft of 110. Now you need to be very careful here, because typically, you look back at Steve Scott's exam questions, cash flow questions, and typically the sign will change. This was a positive figure, this is a negative figure, and typically he does this. This must mean that the net cash flow for the year is negative 230. To move us from 120 positive to 110 negative must mean that the net cash flow for the year is a negative flow of 230. Now, whatever these figures add up to, whatever they add up to, this does not change. Do not be tempted to change this figure. And one thing I used to find horrendous was that students would put a little asterisk there. Do not do this. Don't you dare do this. They would put a little asterisk as a note to marker. This column does not add up. And they're identifying, but it should do. And they're identifying specifically, bringing to the marker's attention that they've made a mistake. Absolute madness. Don't you even think about doing. In fact, there's only one occasion when you should write a message to the marker, and that's when you're doing, for instance, in question 2, and you've got the revenue figure wrong, for instance. Then you put a little asterisk against the revenue figure, and at the top of your answer paper, not at the end, the top of your answer paper, you put note. I have made an error with the revenue figure, which should be adjusted for 3,000 sale or return goods. This affects PBT, PAT, statement of changes in equity by reducing the relevant figures by 3,000. And that's the only time. And you do it at the start of your answer, so that poor old examiner, poor old marker doesn't mark all the way through thinking that you've made this mistake and having to recalculate things on your behalf. Make it at the start. Identify, quantify it, and identify the bits which are affected by your error. Point out to the marker that you know you've made a mistake, but you don't start going through and altering figures, because you probably won't have time to just get you into a bigger mess. And then what happens when you discover that in fact you hadn't made a mistake and you've altered everything? You have to alter it all back again. Don't be tempted to do that. This figure does not change. These 3 figures are written in tablets of stone. And I should have done that. PBT was the first thing I should have done. Those bottom 3 figures at the bottom of my A4 examination paper should have been the next things I did. However, I didn't do it, and so we've now got this adjustment to 210, 160 coming off that is 215. And then I've got another threesome. The first threesome, depreciation, amortization and impairment. Now I've got this threesome, increases and decreases in receivables and payables. And now I've got the third threesome, which is tax paid, interest paid, dividends paid. Dividends paid some Big Four accountancy firms, and when I'm teaching students from the Big Four firms, they say dividends paid should be in the bottom, should be in financing. It is an allowed alternative, and then if you just remember them as the three standard things, these three are standard, amortization, depreciation, impairment are standard, put everything you can into the operating activity section. I do, and I always will do. You're never going to make me change my mind on this, so you can put it into the financing activity section if you wish. Okay, tax paid. We need a little working for this. There's no deferred tax. There could be, but there isn't. So tax paid. We did owe at the start of the year. We did owe 110. As a result of this year's activities, we've got another 60 liability from the income statement. Now, if I had paid all my tax, I would have paid 170. But I know I haven't paid it all because I still owe 80 at the end of the year, so I must have paid 90. That's what I did owe. That's the additional expense this year. That's what I do owe at the end of the year, and therefore I must have paid 90. Interest paid, I can't see anything in current liabilities about loan interest or bank interest due, so I'm going to assume that the interest paid is the same as the finance cost within the income statement of 40. And dividends paid, there's no mention of any dividends. There's no mention anywhere in the question of any dividends. So the temptation, ladies, gentlemen, the temptation is to say, no dividends. This is a nasty little thing that Steve Scott will do for you. You see the retained earnings figure. Retained earnings brought forward as 295. You see it on the balance sheet of 2011. And you see total comprehensive income for this year is 215. Therefore, I should have retained earnings carried forward of 510, but I haven't. Retained earnings carried forward is 375. Retained earnings carried forward is 375. Michael, 295. Never mind that. I've got other comprehensive income. 135 is the profit after tax from which the dividend will be paid. I'm looking for 430, and in fact I've only got 395. So profit for the year, other comprehensive income, 135, 430. Now then, why am I struggling with this? I think the dividend we'll carry on. 395 or 375 is the carry forward. 375. No wonder I'm struggling. 55 is the dividend. 55 is the dividend payment. Now that's a nasty thing, nasty little trick. I'll do it again for you. It's a nasty little trick that he does. The retained earnings brought forward. If you imagine a statement of changes in equity, and we've got a brought forward figure of 295, and this is in retained earnings, and there'll be a revaluation with brought forward 0. Do we have a revaluation? Yeah, brought forward 0. During this year, we've revalued by 80. And that's the other comprehensive income. And we've also, this year, we've also made a profit after tax of 135. So we're looking for 430 retained earnings and 80 revaluation. Well, we do have the 80. It's in the revaluation reserve on the balance sheet. But we don't have 430. There must have been a dividend payment of 55 to leave me with 375. And that's those two figures you'll find on the balance sheet. 80 revaluation, retained earnings 375. So it's a nasty trick. He will not specifically bring your attention to the fact that a dividend has been paid, but it must have been. It must have been. So we've got 185 coming off that. That gives me 30 is the cash flow, net cash flow from operating activities. And then we've got investing activities. Investing activities. And the investing activities is the purchases of assets, the disposal proceeds of assets, any investment income that we receive. So the investment activities are these. Let's see what we have. TNCA. He says we're not disposed of any. There were no sales of non-current assets during the year, but that doesn't mean to say there's been no purchases. TNCA, we started with PPE. We started with 410 and we depreciated that by 115. So we're looking now at 295. 110, 300, 295. 295 then compares with, so we revalued, didn't we? We revalued by 80, 295, 375, and we're comparing that with 680. 375, 305 I think we must have spent. 305 we must have spent. I'll do it in T accounts. We brought down 410, we depreciated it by 115, we revalued it by 80, we have a carry down of 680, so 795, 795, 590, 490, 305 cash. Okay, so that's the PPE. The license. We've got the intangible asset, the ACCA license. And that cost us 100. Well, we started with 200. That 200 we amortized, impaired it, intangible, and amortized it by 25. So that 200 is now down at 175. And that compares with 300 at the end of the year. We must have spent 125 buying this license. And we've also got an investment in rent metal. We started with nil, it's now 230. So we've got 660. That's 30. We've got 660 negative from our net cash flow from investing activities. And then we've got financing activities. And it's only an 11-mark question. I'm not expecting to find much here. Financing activities, probably share movement. Yes, there is. Issue of shares. It's gone from 250 to 350. But beware the premium. Nope, there's no premium involved. So it's just a straightforward 100 share issue. Proceeds of share issue. And we've also got a 10% loan notes, which we borrowed money from. We didn't have any last year. So we've raised 300. 400 then is the net cash flow from financing activities. And that gives me 660, 260, 230. In fact, it does add up right. It is correct. So that then is the cash flow. That's my 11 marks in the bag. If I look at it coldly and I only need another 3 marks, I've got 11, I only need another 2 marks to pass this question. But this is an area now where I find that students tend to be reluctant to write anything. I'm into part B of the question. Maybe the reluctance is in the part of the world where I work. My students don't have English as their first language. My students tend to love playing with numbers rather than writing essays or explanations. Anyway, the requirement for 14 marks is explain how the new contract and its related costs may have affected Tangier's operating performance, identifying any further information that may be useful. It's 14 marks. Now, in my 15 minutes reading time, I would have spent probably substantially the whole of my 15 minutes reading time planning the wordy answers. I've got 14 marks here, and in question 4 I've got 4 marks, part A, and in question 5 I've got another 10 marks. So I've got 28 marks worth of written. That's not unusual. written answers to prepare for. Now, what I suggest you do is that you plan what you're going to write. The planning time would be sensibly just take the number of marks and divide by 2. That's 14 minutes. Now, you've got 15 minutes reading time. Are you going to spend that 15 minutes reading the numbers involved in question 3A? Are you going to spend the 15 minutes reading the requirement in question 2 that asks you to prepare a calculation for earnings per share? No, this is a waste of time. You've got 14 minutes, you're 28 marks, divide by 2, 14 minutes, planning what you're going to write in part B of question 3, part A of question 4, and in question 5, parts A and B. That's actually 4, and more than that. You've got 14, 4, 10, and 4. No. You don't, stupid 10. It's alright, it's just me being silly. So that's where I would have spent my 14 minutes, reading the exam paper written questions. So now I'm going to spend, I've got here 14 marks in question 3, I'm going to spend 7 minutes. I'm not going to write it out, I'm going to spend 7 minutes to plan what I would have written in an exam. And I'm trying to get 14 different things to say. I've got 7 minutes to do it, it's 30 seconds per point, and I've already done the cash flow, explain how the new contract, its related costs may have affected the operating performance, identifying any further information that may be useful to your answer, may be supported by appropriate ratios, up to 4 marks available, but ratios and analysis of working capital is not required. Alright, so 7 minutes, the time is 15, it's coming up to 15:50, give me a break will you, it's actually 15:49 it says there, 15:50 plus 7, 15:57, I've got just this 7 minutes to think of things to say. How may it have affected the operating performance? Diverts attention. It's a big issue, this. It's a big contract. It tells me it's related. When a tender for contract, bidding process is very competitive. So it diverts attention away from core activity. These are only notes for me to work on and coming to write an answer. I'm writing them in full here, diverts attention away from core activity, for your benefit. What I would do was maybe put some arrows here, attention from core would be what I would write for myself, but for you I'm going to write it out in full. What else can we say? Time and effort involved. And the time and effort in preparing tender, the time and effort is really just another way of saying diverse attention away, but it's just something that came to my mind. Experience in tendering, but also experience in aircraft engine manufacture. Now, I've read this question, I've read it 2 or 3 times to be honest with you. I've read it while I was having my coffee a moment ago, and it says that we contract to supply a jet side with aircraft engines which Tangier manufactures under a recently acquired license. Now, there's nothing in there that tells me that Tangier is a normal, everyday aircraft engine manufacturer. In fact, I can read that. They manufacture these aircrafts that we manufacture under a recently acquired license. It could be, and I see no argument against it being the case, that this is the first time that Tangier has manufactured aircraft engines. There's nothing in this statement, this first sentence there in point number 1 of part B, which tells me that they normally manufacture aircraft engines. So I want to know what their experience is and whether there's any learning time involved in manufacturing. Another thing is possible waste. If they're learning how to manufacture aircraft engines, They've got possible wastage, time loss. There's this lack of experience which could have a substantial financial effect. There's no indication, and this is additional information I would need, no indication of any revenue generation this year. This was on 1st of June 2011, so we've had 9 months since we won the contract. And we don't know if there's been any revenue coming, but there will. Therefore, we've got 9 months of outgoing, of expenditure, and potentially no income. I notice there's no intangible asset in terms of development expenditures. So, all right, I can reasonably assume that we do manufacture aircraft engines and that we're not developing new ones. But even so, it's not particularly clear. Just want to go back to my cash flow, but just using a bit of information from cash flow. The investment in the shares and the investment in the license. The cash flow for the year is 230 negative, which is exactly the amount that we spent buying shares in rare metal. Is that right? Shares in rare metal, exactly 230. And that's exactly the net cash flow for the year. So that might be worth a point, isn't it? That the investment in rare metal exactly matches the net flow for the year. And if it were not for that net cash outflow, if it were not for that investment, then we would have broken even in terms of cash. We would have generated sufficient cash together with raising sufficient cash from our financing activities. We would have inverted commas, broken even. I don't know, I'm wanting to say that 10% loan notes seem expensive. They seem expensive particularly in the light of we already have 5% loan notes, CF existing 5% loan notes. And of course, because of this 10% loan notes, this has put a strain on our bank, so we can make a note strain on cash resource. The license itself, never mind this 230, which exactly equals the exactly matches the net cash outflow of 230. Never mind that, the license itself cost 125, and that's also put a further strain. If we had not involved ourselves in this tendering, then we wouldn't have spent 125 on the license. We wouldn't necessarily have spent 230 investing in rare metal, and we could have concentrated rather more actively and attentively on our core activities. It suggests I've got full marks available for some ratios. I want to just look at revenue, for instance. Revenue's gone from 1820 to 2,700. That's the revenue's increased by around 50%. 50% would have been 2730. Cost of sales, that's increased by 800. Cost of sales increased by 80%. As near as makes no difference, just round figures. Gross profit. I'm assuming this has fallen quite dramatically. 810 as a percentage of 270 is exactly 30 this year, whereas last year gross profit was around 40% last year. So we've had a major fall. The gross profit has fallen by 25% of 40 down to 30%. Distribution costs might be worth looking at. Distribution costs has gone up 100 on top of 130, that's 75. Distribution costs increased by 75%. Admin expenses I would imagine quite a bit of admin has been dedicated towards the preparation of the tender. Admin expenses has gone up 145 on 200. That's 72.5% increase in admin expenses. So cost of sales up by 80, distribution up by 75, admin expenses up by 72.5, and yet revenue is only up by 50%. And it does seem that we've not, presumably not yet, reaped the benefits. And maybe cost of sales increase and then the fall in gross profit, maybe this is the point of Steve Scott saying that the bidding process was very competitive. And I presume that therefore even if there were sales included in this year's revenue, that it's a tight margin and it's deflected and reduced and disproportionately affected our existing operations. It seems that we've got a lot of expense, just another thing that I can write a sentence about, a lot of expense for not much increase in benefit. I want to say, I've not actually said strain on cash, which may mean that we're unable to pay our payables on a timely basis. It does look that way. We're not able to pay our payables on a timely basis. Current assets are 395, current liabilities are 400. We've got negative current ratio. Last year we were positive. It was about just over 1.1 last year, 1.15 last year, and this year we're negative. So we've got a strain on cash. The statement of financial position looks weaker, and therefore maybe a little bit awkward to go out and raise some more finance. We don't know whether the loans are secured. They are. The 10% loan is secured, and it does suggest it's secured on the value of the property which we've revalued. When did it say we revalued? Does we know when we revalued? No, we don't, do we? During the year has the property has been revalued, but we don't know when, so we don't know whether it's this new property that we've just spent. How much did we spend? We spent 305. 305. This property here was down at 295, and we've revalued it by 80. And 80 as a percentage of 295 is about 25%. Just over maybe 30%, 27%. So we've revalued that property by 27.5%, which may or may not be excessive. We don't know. We don't know whether it's a fair revaluation. We don't know who has revalued. I mentioned this admin going up by 72.5. I'd like to know, the further information I'd like to know is how much of that is attributable to work on the license, the tender application, and why has distribution costs increased by 75%? That's a strange one. That does actually stand out and looks a bit strange. So those are the points I would raise. 15:57, 16:01. I've actually spent too much time, but don't forget that this is 7 minutes out of my 15 minutes planning time. I've actually taken an extra 4. This 14 mark question is worth 25.2 minutes, and I've just borrowed 4 extra. So I've still got 21.2 minutes to write out the answer. I've got how many points? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I've done strain on cash resource twice. 10, 11, and then I've got 4 potential marks for ratios. I did mention the current ratio. I think I can spend 21 minutes and write out 14 sentences. I've also mentioned, as I was talking through it, I'd like to know to what extent was the admin cost related to the preparation of the tender. I'd like to know whether any revenue has been generated this year as a result of this extension of activity. And I've not used the information about rare metal. I wonder why Rare Metal has not prepared any, and not proposed or paid any dividends. Be interesting to know whether we are in the position. Our cost of sales has shot up by 80%. I'm wondering how much of that is attributable to Rare Metal, in order to secure supplies of specialised materials used in the manufacture of the engines. Cost of sales, that does seem high. A big increase, considering our revenues only increased by 50%. I'm wondering how much of that is expenditure still within closing inventory. It'd be interesting to know what the closing inventory, I can see what the figure is, it's 200, but the basis of the calculation of the valuation of the closing inventory would be interesting, because if we spent a lot of money acquiring material and putting labour into the manufacture of engines which we've not yet sold, I wonder how much of the cost of sales increase may be attributable to an incorrect valuation of closing inventory. That's the sort of thing I would raise in my answer. Overall, I should have finished at 16:03, and it's still 16:13. I've still got 10 minutes. But mind you, I said that I'm going to spend 21 minutes writing, didn't I? So yeah, it's a tricky thing to say all that you want to say. I think the problem that students generally will face is maybe a lack of appreciation or ability to let the figures talk to you. Let the figures tell their own story. Let the figures explain to you why it was necessary to revalue the property. Let the figures explain to you the impact of the fact that we're borrowing 10% loan notes. The finance costs 10%, loan notes 30, and 5% of the 35. The finance costs are 40. If we'd had that 10% loan note for a full year, that would have cost us 30. The 5% would have cost us another 5. The finance charges are 40. I presume even if we'd had revalued the property during the year to facilitate the issue. We don't know when the loan note was issued, but we've got bank overdraft as well. We don't know when it was that the bank went into overdraft and caused us to start accruing or incurring bank interest. But you'll become more able to look at financial statements and figures for companies and make up plausible reasons why figures and ratios have changed, why figures are as high as they are or as low as they are, or even why they haven't changed and you would have expected them to change. So I can only recommend strongly that you get stuck into financial statements of companies, either that you audit or that you are able to download off the internet, and start trying to appreciate the stories that lie behind the financial statements. Okay, that'll do. Let's stop this one.